Since late 2022, crypto has been in an uptrend, with Bitcoin leading the way. As other cryptos like Ethereum slowly start catching up, everyone is starting to wonder, when will the crypto bull market end? Some believe it will be over in 2026, others are saying it will be over by the end of the year, and a few are even arguing that the macro backdrop of constant money printing means that we get a super cycle. And that's why today we're going to do a deep dive into when the crypto bull market could end, what catalysts could cause it, where the bottom could be, and just how low prices could go. My name is Nick. Stay tuned. Before we begin, you need to know that nothing in this video is financial advice. It's educational content intended to inform you about how the crypto market works. If you want more content like this, then smash that like button, subscribe to the channel, and ping that notification bell so you don't miss our next video. Now, the first step to figuring out when the bull market will end is to understand what exactly the bull market is and how long it typically lasts. To quickly recap, the crypto market follows a 4-year cycle consisting of a 1 to 2 years of a bull market and 2 to 3 years of a bear market. During the bull market phase, Bitcoin leads and other cryptos eventually follow, with the biggest gains coming towards the end of the bull market. There's just one problem, and that's that there's no consensus on what counts as a crypto bull market. As some believe it starts the moment Bitcoin has bottomed. Others say it only starts after Bitcoin has hit a new all-time high. And a few would even argue that the bull market shouldn't be measured using Bitcoin's price as a reference, but the Bitcoin halving as a reference. In case our earlier description didn't make it clear enough, we will be using the Bitcoin halving as the reference point for this video. Historically speaking, Bitcoin would top roughly 16 to 18 months after the halving. Now, for context, the most recent Bitcoin halving took place in April 2024. So, 16 to 18 months later puts us in August to October this year, as we explained in our video about the cycle top. More about that right over here. Now, as you might have guessed, there also isn't any consensus about what counts as the bear market. Some believe that crypto is in a bear market the moment that Bitcoin has dropped by 20%, because that's the definition of a bear market in most other assets. The problem is that it's normal for Bitcoin to drop 20% even during bull markets, which would mean that Bitcoin would be in a bear market every few weeks, which would be pretty silly. Similarly, others say that the bear market begins once there's been a clear topping pattern after a parabolic run, like a double top, a head and shoulders, or some other Wyckoff distribution pattern. Of course, that's also not definitive, because we've seen Bitcoin bounce back from bearish patterns in previous bull markets and put in higher highs, like in 2021, when Bitcoin fell to 30K and then rallied to 70K. A few would argue that there are other technical indicators that you can use to get a sense of when Bitcoin is in a bear market, and we fall into that camp. Historically speaking, the Bollinger Band moving average on Bitcoin's monthly time frame has historically served as a perfect line in the sand between bull and bear. When Bitcoin is above it, it's in a bull market, and when Bitcoin is below it, it's in a bear market. Not only that, but the same thing can be seen on the monthly charts for crypto indices like the total crypto market cap and the others. When these indices are above the Bollinger Band moving average on the monthly, they're in a bull market. And when they're below the Bollinger Band moving average on the monthly, they're in a bear market. And the best part is that it's a free indicator available on all exchanges. And if you're looking for an exchange or want to find a better one, then you have to check out the Coinbureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges around. Now, to get these goodies, all you need to do is to hit the link in the description or scan this QR code. Once you get on the deals page, find a deal that suits you and click on the Sign Up Now button. These deals, well, they won't be around for long, so you have to take advantage of them ASAP while you still can, using the link in the description or by scanning this QR code. Now, to quickly recap, there's no agreed upon definition for what counts as a crypto bull market or a crypto bear market, but historically speaking, the Bollinger Band moving average on the monthly time frame for Bitcoin and crypto indices like the total have been a line in the sand for where the bear market begins. And this ties into the second step, and that's to figure out where exactly this line currently is. At the time of shooting, the monthly Bollinger Band moving average for Bitcoin is around $82,000, and the Bollinger Band moving average for the total index is around $2.7 trillion. And that's almost 30% below the current prices. Believe it or not, but the crypto market could fall to these levels and it would still technically be in a bull market, meaning that Bitcoin and other cryptos could still recover and put in new all-time highs. But now the others chart is where things get interesting. The monthly Bollinger Band moving average is at around $250 billion. At a current value of around $280 billion, this means that others only has around 10% of wiggle room before it's technically in a bear market. Not only that, but it saw temporary deviations below this level earlier this year. And this is important to note, because it could be an early sign that the broader bear market is close. In other words, if others was to see a big, sustained break below the monthly Bollinger Band moving average, then this could be an early warning sign that other cryptos are going to follow suit. Just a quick reference though, others is the combined market cap of cryptocurrencies outside of the top 10, and these are the last to rally during a bull market and the first to crash during a bear market. Remember that. Now, obviously waiting for cryptos to fall below their respective monthly Bollinger Bands before throwing in the towel isn't the best strategy, because by that point, prices have already dipped significantly. Thankfully, there's another indicator that you can throw into the mix, and it's one that we mentioned in our video about how to spot the top. The Relative Strength Index, or RSI, also on the monthly time frame. If you can see that the RSI has hit an overbought level of somewhere between 80 to 90 on the monthly chart of a crypto, and prices are starting to break below shorter-term key levels like the weekly Bollinger Band moving average, then there's a good chance the top is in and the bear market is starting. Not sure who needs to hear it, but you'll never know it's the bear market for sure until after the fact. Be that as it may, the crash that kicks off the bear market is often caused by a big bearish catalyst, just like the final rally in a bull market tends to be caused by a big bullish catalyst. And this relates to the third step to figuring out when the bull market will end, and that's to be on the lookout for big bearish catalysts that could cause crypto prices to fall from their highs and trend towards these key levels. For example, the 2017 bull market ended after South Korea proposed banning crypto exchanges. Similarly, the 2021 bull market ended after Fed Chairman Jerome Powell signaled that the central bank would begin raising interest rates in response to inflation. It goes without saying that there are no shortage of catalysts that could cause the 2025 bull market to end. The catch is that the catalyst is likely to be something that the crypto market isn't aware of and, crucially, isn't pricing in. And it also needs to be a catalyst that would occur around the cycle top. One example could be the Treasury Department requiring that all on-chain activities involving stablecoins mandate KYC, something that's currently being considered. The comment period for the rule is until mid-October 2025. Another example could be the US imposing tariffs on China after the current 90-day pause expires in early November. Similarly, escalation between China and Taiwan could occur around that time, which is something that we pointed out in our video about why the crypto market crashes. And if you watch that video, you'll know that these catalysts technically don't cause the crash, they just exacerbate it. The actual cause is leverage, specifically liquidation of leverage. And this includes long liquidations on exchanges and liquidations in DeFi and CeFi. As most of you will no doubt know, long liquidations on exchanges occur when traders bet that prices will go up, but prices go down instead. And this forces them to sell the crypto they were betting on, causing its price to fall even further. What you may not know, though, is that liquidations in DeFi and CeFi are much deadlier. And that's because they tend to be much larger in size than leverage trades, and they take much longer to unwind. Whereas long liquidations will result in immediate automated selling pressure, the liquidation of crypto collateral used in DeFi and CeFi borrowing results in prolonged robotic selling as lenders are hopefully made whole. To be clear, these DeFi and CeFi liquidations will occur almost every single time there's a pullback, and the same is true for long liquidations, which all of you are no doubt familiar with. The caveat is that when these liquidations occur near cycle tops, it usually means that everyone has taken on as much leverage as they can. Traders have maxed out their credit cards, and investors have maxed out their crypto loans. The result is that when some bearish catalyst comes around, this cocktail of liquidations starts pushing the markets down, and there's no money left for anyone to buy the dip. Some would argue that this cycle could be even worse in this regard because we're not just dealing with traders borrowing using their credit cards or investors borrowing using their crypto, we're also dealing with institutions. And most concerning of all are the crypto treasury companies that have been accumulating billions in BTC, ETH, and over a dozen other cryptos. When crypto prices start falling as a result of long liquidations and CeFi and DeFi liquidations, this will put enormous pressure on these companies and could result in even more forced selling. Again, this is a process that could take time to unfold. And again, the result would be a persistent wave of sell pressure with nobody coming in to buy the dip. The worst part is that most of this selling pressure would be robotic and automated. And that means using technical analysis to try and figure out where prices could bottom probably won't work because you'll be dealing with price that's been driven by automation, not emotion, which is what TA measures. And this pertains to the fourth step to figuring out when the bull market will end, and that's figuring out when prices could bottom in the bear market. In our experience, there are three ways to do this: cycle and technical analysis, which we just discussed earlier, catalyst and leverage analysis, which we discussed a moment ago, and sentiment and positioning analysis, which we'll explain in a second. First, the cycle analysis and technical analysis. Historically speaking, Bitcoin tends to bottom around 1 year after it tops, and the rest of the crypto market tends to bottom with Bitcoin. Assuming Bitcoin tops around September-October this year, this means it's likely to bottom in September to October sometime next year. But just keep in mind that people are aware of this, so the bottom could come a bit sooner. Fortunately, technical analysis can help us get a sense of whether the bottom has come in sooner, particularly the RSI. Historically, Bitcoin would bottom to an RSI reading of around 40 on the monthly time frame. It's of course safe to say that Bitcoin could always go lower than what the RSI suggests, but if you're buying when the monthly RSI is at around 40, history suggests you're very close to buying the bottom. Unfortunately, technical analysis doesn't account for the catalysts and leverage that could occur around cycle bottoms, and these are the exact things that can take prices lower than you expect. Historically, the crypto market has bottomed when a large, over-leveraged entity finally gets liquidated. In the previous cycle, that was FTX. In this cycle, it could be a crypto treasury company with bad management. This final liquidation is almost always accompanied by extremely bearish sentiment from anyone who's still involved in crypto at that point. And this begs the question of how exactly you can measure this bearish sentiment. The answer is just to look around and see if everyone thinks it's all over. The moment that everyone thinks that the crypto market is completely cooked for good is typically a sign that the bottom is in. In the last cycle, the thing that caused sentiment to sour wasn't the collapse of FTX per se, but the aftermath. Now, to refresh your memory, the collapse of FTX put pressure on massive crypto companies like Digital Currency Group with its trading arm Genesis Trading going bankrupt. It also resulted in unprecedented regulatory scrutiny of the crypto industry, resulting in debankings and lawsuits. Chances are that we will see something similar this time around when reckless treasury companies become forced sellers of BTC, ETH, or some other cryptos that was purchased using money from another large counterparty. As a not-so-fun fact, recent reports from Galaxy Digital suggest that Tether is the largest CeFi lender, so it could be the entity that faces pressure in the next bear market. Now, for those unfamiliar, at this stage in crypto's evolution, investors have seen it all. Exchange hacks, collapses, scams, rug pulls, exploits, and decentralized stablecoins imploding, liquidations, various kinds of carry trade unwinds, and so on and so on. And some would argue that the only thing that the market hasn't seen yet is the downfall of a truly systemically important crypto company like a stablecoin issuer. Something along these lines would be guaranteed to result in record lows in crypto sentiment, and it would present a generational opportunity to anyone who has the stomach to take advantage of it. After all, crypto is at a stage where it's here to stay. Could these specific crypto projects and crypto companies change from cycle to cycle? History suggests they will, and these newcomers are often the next leaders. And this brings me to the fifth and final step of figuring out when the crypto bull market will end, and that's figuring out exactly how low the crypto market could go. I'll start by saying that this is something that is impossible to estimate, simply because it ultimately depends on the type and number of bearish catalysts the market will experience, as well as the amount of systemic liquidations they will cause. That said, let's consider two scenarios. One where the crypto market experiences a drawdown that's consistent with previous cycles, and another where the crypto market experiences a drawdown that's more severe than previous cycles because of some nasty combination of bearish catalysts and liquidations. The bad news is that the first scenario still makes it impossible to estimate altcoin bottoms. The good news is that the first scenario makes it possible to estimate Bitcoin bottoms. Historically speaking, Bitcoin never fell below its previous cycle top. And FYI, Bitcoin's previous cycle top was around 70k. And this means that Bitcoin's bottom in the next bear market is likely to be somewhere around 70k, plus or minus 10k due to everyone buying early due to the historical trend or excess liquidations, respectively. Again, it's impossible to estimate altcoin bottoms using Bitcoin's price, just because the specifics of catalysts and liquidations vary so much between tokens. Look no further than Terra's collapse for evidence of that. For what it's worth, most altcoins will fall by 90 to 95% from their cycle highs. So, if you can see that Bitcoin has fallen to around 70k and an altcoin has been down 95%, it's probably bottomed. Now, regarding the scenario where there's some nasty combination of bearish catalysts and liquidations that take crypto prices way lower than anyone expects, from our perspective, it's only a matter of time before we get a bear market like this, because if you think about it, crypto has been in a structural bull market for over a decade. Yes, there have been booms and busts, but it's been bigger every time. At some stage, crypto will have a bull market where the amount of leverage reaches a level that causes serious system risk to the market when it inevitably unwinds, possibly even other markets. Logically, it would be impossible to know how any crypto would go in this scenario because the market would be in a truly uncharted territory. Bitcoin would likely fall well below 70k. Make no mistake, a collapse of this scale would likely result in intervention by authorities, whether it's money printing or regulation or something else. Yes, any money printing would be bullish for crypto in the long term, but the regulation would restrict the crypto projects and companies that survive into the next cycle. The market would look very different the next time the bulls come around. But as we all know, this time is different are the most dangerous words in investing because the core of what happens is never different, just the details. On a balance of probabilities, a standard garden variety bear market is what comes next after this bull market, and everything that we've discussed today will make surviving that turbulent period easy. Then we can talk about how to prepare for the next cycle. Until then, be sure to check out our video about how the crypto market works, using the link right over here. And if you're not subscribed to the channel, you can do that right over here. This is Nick signing off. Thank you guys very much for watching, and I will see you in the next video.